Hey guys, welcome back to another one. This is Crypto Elite, home to the #1 Theta community. And if you like this content, please like and subscribe to the channel. In today's video, we are going to be talking about how a very strong US dollar, as well as other macro factors affecting the entire world right now, is more or less affecting the crypto market and particularly Theta. So we will talk about that, and then we'll dig into my personal thoughts at the tail end of this video. But yes, as you can tell, no matter how much good news has happened in the overall Theta ecosystem over the past couple months, whether that be the announcement of the meta chain or mainnet 4.0, whether that be anything in this top banner that keeps flashing with awesome news, World Poker Tour and Theta to launch the first Web3 digital seasons pass. That's very awesome news. There's been awesome news from, let's just see what they have down here. Fuse Media, American Idol, and American Idol in the Philippines. There's also news. And then the DRM technology that Theta keeps coming out with and crushing things. CAA, Sony, American Idol, and Google all have great things to say. No matter what is said, it seems like the price of Theta and the overall crypto market keeps going down. And let's dig into some of those reasons why that is. I think this article, as well as a couple other articles we'll look at, helps give us a big picture. So right now, if you're unfamiliar, the US dollar is hitting historic highs by comparison to other currencies. And that means some good things and some bad things. It all depends on what perspective you're looking at. So we'll look at a couple comparisons here. So the British pound on Friday tumbled to its lowest level against the US dollar since 1985. That is insane. That's a very, very long time ago. The euro itself is also below the parity that used to be 1 US dollar and it equals 1 euro, or vice versa. US dollar was always lower than a euro. But for the first time in 20 years, it bounced back to its parity, which was also very crazy to see. So this is great for US members. If we wanted to travel abroad, our money gets us a little bit more bang for our buck, which is good. But everything else, it's not so good. So earlier this month, the Japanese yen, we can also see it there, had the lowest level since 1998. So all different currencies across the world have been just losing value in comparison to the US dollar. And that's all due to what the Fed is doing in order to slow the economy down and also just make sure that we will not hit a recession. If we do, or slow inflation down, not economy, slow inflation down, and try and not get us into a recession by doing something called making it a soft landing. And this is all due to the higher interest rates. So they are raising the interest rate by the US dollar at the federal level. And one way to think about this, I really love this example, is to put it in terms of crypto folks that we can understand. Remember how everyone was buying UST because of that 20% APY and the Anchor protocol? Now the US dollar isn't near 20% APY, nor will it ever be, I hope not, but if you can get a very, very high APY, and we'll check out some APYs here in a second for some very boring products like bonds, government bonds, then a lot of companies and institutions would rather put their money in bonds where they can make a guaranteed 4 or 5%. And then sometimes we'll talk about I bonds here in a second, closer to 10% APY. And that is something that they would rather park their money there for a year or two rather than put their money in stocks or bonds or stocks or crypto, more volatile assets. So let's check this out. Bond yields soar as market weighs threat of a recession and what it means for your investments. And they give a couple good examples here. Bond yields jumped this week after another major rate hike from the Federal Reserve, and the Fed has been estimated that they are going to continue increasing these rates until inflation is under control. So for the foreseeable future, these rate hikes are going to continue. So that means that these yields that I'm about to talk about are going to probably continue to go up a little bit each time there's a hike from the Fed. So the 2-year Treasury yield on Friday climbed to 4.26%, and that's a 15-year high, and the 10-year Treasury is at 3.8%. So like I said, these businesses, they're really, really smart. They can foresee or foreshadow what's going to happen with the recession or incoming recession or slowdown, whatever will happen. And instead of putting their money in these high fancy tech stocks that will make a lot of money in certain economic conditions, they would rather park their money somewhere that's going to yield them 4.2%. Why not? Why put it in something that probably is going to lose you money, even though it is something high-tech, fancy, and it's the cutting edge? Or you could put your money somewhere where it's not going to lose its value and it's going to pay you something modest, 4%. You're not going to crush it, but you're also not going to lose money. So that is what these companies are thinking. There's also something called I-bonds, and I'm not as smart on I-bonds, so I won't go into the nitty gritty because I really don't know it. But I do know right now they are yielding close to 10%, 9.62% for I-bonds. So that's something else that these companies, they would rather park their money with the stability of the U.S. government in these boring bonds rather than put it in the stock market. And we can see that. Here are some examples over here. This is the Vanguard, basically the S&P 500. We can see that from the top to where we are right now, we're down about 22%. And this is probably going to continue. It all depends on what's going to happen with the economic forecast for the future, which by everyone's account does not seem very great. And also we can look at the QQQ, which is basically looking at a broad range of tech stocks all put into one big ETF. And then if we check out what the tech sector is looking at, minus 31% from those highs near the beginning of the year. So yes, I would also agree with the smart corporations and the hedge funds. I probably wouldn't want to park my money in the market with the S&P 500 down 20% and the tech sector down over 30%, which is pretty crazy. Now that brings us over to crypto, and crypto, we can see the same thing. So earlier this year, they follow the same cycles as of right now. They're pretty close, not perfectly, but we can see that the high for Bitcoin and the entire market still follows Bitcoin was around $66,000. And now we are down to, as we know, hovering between 17, 18, 19, depending on the day. That's down like 70% plus, which is a lot. And the altcoins are getting hit even harder. So Theta has been on a continuous slide for a little bit longer, but starting at $8 and then moving down to about the $1 range. That's getting closer to an 80-85% decline, and similar with TFUEL as well. So it just makes sense that a lot of these companies, they're not going to be looking at these companies right now to invest their money, no matter how much good news, how much good tech, how many good things are happening right now. It is what we call an accumulation phase, and now is the best time to accumulate. So in summary, this kind of does a good job of wrapping up why a strong dollar leads to a struggle for emerging market economies. And it all has to do with global trade. So as it's the invoicing currency of the world and holds the most purchasing power, this means when the dollar appreciates, other currencies essentially depreciate, making the world poorer and less able to engage in trade. So it makes countries that have dollar-denominated debt less creditworthy, and it makes them harder to purchase U.S. currency and manage their debts. So that is one good way to summarize what's happening there. So in summary, guys, my personal thought on this, I continue to purchase cryptocurrency. I think now is the perfect time to accumulate. And I think that we probably will be in this crypto winter for a while until the next halving. And I know that's an estimation. A couple other influencers out there probably think the same thing. I've heard it before. So probably around the 2023-2024 timeframe is probably, and these are all estimates, all subject to change, probably when the next crypto bull market cycle will happen. And that, once again, all depends on the macro and microeconomic factors that are happening as well. If we're still in a recession, or if we are in a depression during that time, there's no way there's going to be another bull cycle. But something like a halving for BTC could be what pulls us out of the crypto winter, assuming that the other factors are in play as well. So let me know what you guys think of this in the description below. Slightly different and not as Theta specific, but hopefully that ties into Theta enough. I'll see you guys on the next one.